Of course, the rally in stocks yesterday came after AIG's new CEO told Bloomberg in an exclusive interview that the company plans to repay the government. It was another reminder of how painful bets against the financial sector can be these days. John Ehrlichman is at our markets desk to tally it all up for us. John?
Yeah, you're right about that, Scarlett. That Bloomberg exclusive resulting in some explosive activity in AIG yesterday. Not just the stock performance, AIG shares were up more than 20%, but the volume up more than 300% from Wednesday's trading session. Now, Bloomberg's Jeff Kearns had a great story overnight about the options activity. A lot of activity yesterday, and some of the strategists he was talking to pointing to the idea that we saw some short covering in AIG. And if you think about the financials more broadly speaking, you get this idea that perhaps the shorts have been throwing in the towel. I want to highlight an ETF that a lot of people look at when they're talking about the financials, the XLF. It was trading at below $6 back in March. It's now north of $14, and we can highlight what's been happening from a short interest perspective. There are roughly 500 million shares outstanding for this ETF. Well, back in March, when we were seeing this ETF under significant pressure, nearly half of the total float was sold short. Now, we're at about 1/5 of that level. Where does that leave us, Scarlett? Basically back where we were at the beginning of January. And obviously, not only does this mean or help to explain the weakness we've seen in some of those bearish bet ETFs out there, but also we talk about the weighting for the financials within the S&P overall. Not what it once was, but it certainly has been climbing and currently standing at around 15% behind the technology group only. Back to you.
Thanks so much, John. We'll speak with you in a little bit.